This is part one of our very special conversation with Ritesh Khamitkar. Even if you know nothing about the stock market and want to stimulate your mind, this is the episode for you. Welcome to the Clever Cast's first episode. Hi Ritesh.
Hi Atharva, thank you for having me on the podcast.
Yeah, it's been great pleasure having you on this podcast. We met first time in the 11th, na?
In 11th. 11th was the first time when we met.
Yeah, we got almost same marks in all the subjects, and
Yeah,
but
yeah,
we
actually we were having this, yeah, actually we were having the same marks in the CAT.
and but got admitted into different colleges.
Yeah,
So let's start the podcast. To those people who don't know you, can you introduce yourself in short?
yeah, actually I'm an option trader. Actually I trade in F&O. That is one of the segment in Indian stock market, that is future and options. So actually I'm a trader in F&O and I trade there for around like it's been a year now.
Okay, great. For the people, Ritesh earns 50% on his capital every single month and consistently. Uh, to the next question. What is that one thing you wish you knew before starting trading?
Yeah, what actually I feel is that most of the traders actually I see on the social media, they only share the screenshot of the profits, okay, and they never show their losses. So what it's happening is like that any new trader who sees the screenshot of the profit, he thinks that the market is the only place where he can make easy money, but it's not like that for sure, because market is a place where 99% of the traders lose money, and one thing is for sure that if he don't know how to manage his capital that he brought into the market, definitely he's going to lose all his money, and that is for sure. And don't know, I think most of the traders came in the market after the scam 92 by seeing scam 92. So that is one thing I feel. And today now I think it's 31st May and the market has touched all time high. Like Nifty was, I was seeing around 1255, it was trading around 15,550. So
Oh,
this is the all time high that the market has shown up.
okay. According to you, what was the biggest failure and faced, and what did you learn from it?
Actually, just see, at the beginning, means actually in March 2020, there was a crash due to the COVID in the market. And the market fell around 30 to 40%. And that time I went to my one of the cousins, and actually he showed that even when the market fell, he was in the profits. So actually I
Great.
was surprised that how like he was doing and all. Then actually from there, actually just see, in our family, everyone does a trading. Even my dad is in investing like for around 10 to 12 years. That's why in our home, uh,
There's a
from
culture of
like
trading.
there is a culture of investing, you can say, not trading.
Okay.
Like my dad have has invested a lot like in from last 10 years. So because of that, actually I was having a good background, and then I went to one of the cousins in March 2020, and when the market fell, he told that I got introduced to the options world.
Okay.
Okay, so when the market fell, he bought a put option. That is one particular option. Like there is one call and there is put. So when you buy a put option, if the market falls, you will be in the profit.
Okay, great.
So from there, I got to know that even when the market is falling, you can hedge the positions that are in holdings and all. So yeah, that was the journey, and that initiated me to come into this trading industry. And from there, I started learning a lot. Like I read a lot of books in lockdown. So he firstly told me to read the book, that is one Candlestick Bible. So
Okay.
from there, I started the technical analysis, and then after that, I started trading the Varsity series of Zerodha, and it is one of the best series I would recommend the traders. So that was the first book I read. Like I think there is a module 5 in Zerodha Varsity, that is about the options, and in very simple language, they have explained each and everything. So yeah, in that way, my journey began into the trading. Okay, then now coming to the failure that I have faced in the stock market is that there was one trade actually I still remember, and I forget to put the stop loss,
Okay.
and like my trade went. like fully opposite to me, and like I was seeing around 5,000 of loss in the holdings position, and even I was not knowing that how to hedge the positions and all that time. So I decided that I'm not going to trade like after like learning or reading some of the books or pursuing some of the course, only then I'm going to trade. So even that time I did not quit the position in the loss of 5,000. Actually, just I patiently waited, and then loss came to 1100 around. Then I closed the position, and that till now is the biggest loss that I have faced in the market.
Okay, according to some trade, not putting the stop loss is worst nightmare, right?
Yeah, for sure. Like I've seen many of my friends, like they started trading by seeing the scam 1992 again. So it's not like that. That is totally a different world. Actually, just due to the due to the technology upliftment in this world, most of the people in previous generation used to take the advantage of arbitrage. Like there was a gap between the price update and all.
Okay.
That's why it was very easy to manipulate the market. But now, like I've read like yesterday or day before yesterday that BSE valuation is $3 trillion
Yeah,
today.
that's almost equal to our India's GDP, right?
Yeah. So it's not that easy now to manipulate with people those who are having big money and all. So yeah, and many of the people what they tell is that trading is a gambling and all. So it is definitely not. And
uh,
last month actually I've means in all trading sections I have made around good amount of profits. Okay, in last month I have zero loss for that.
Great, great, great. The term that you have used, that arbit, what that was?
Yeah, arbitrage is like just see there is two exchanges, NSE and BSE.
Okay,
Okay, and if take particular stock that take you can take a Reliance. Okay, so the price of Reliance in NSE is around 200, and if you see that particular price at exact moment,
hmm.
it will be like 2000 201. Okay,
Okay. That was some
so
difference between those two
there is one
exchanges.
rupees difference. Yeah, there is 1 rupee difference. What most of the traders do is that they sell 201 in huge quantity, and
Okay,
they buy 200 in huge quantity, like same amount of quantity.
okay,
So there is no loss for them. Like even if the market moves up, either then that they have bought that will go up, so that 1 rupee difference will remain, and by end of expiring they can take out. Like actually it is not in equity world, but it is in F&O world. So that difference there is sure short profit, and previously it was not real time updation and all, so that's why that was the problem. So most of the traders made a lot of money in like 2008 and 10.
okay. The pre-digital era.
Yeah.
So now, what's the difference between at right now? What's the difference between the two shares in NSE and BSE?
Actually, it is the same, but these two are the major exchanges in India.
Okay,
So mostly the brokers like Zerodha, they only have the two exchanges, NSE and BSE of particular any stock.
okay,
So either you want to buy from NSE or BSE, it is like one and only is the same.
okay.
Just two exchanges are different.
Okay, great. What advice you will give to someone who want to pursue a career like you?
Advice, just see, you should have passion about the trading. That is one of the most important thing I feel. Then start with the technical analysis. It will help you a lot as you go along. Then I would like to recommend each and everyone that first give around 6 to 12 months for just only learning. Okay.
Okay.
So my journey, I will tell, I used to paper trade for around 4 or 5 months.
What's that paper trade? Can you elaborate?
Paper trade is like the market is going in the real world, and one of the particular, like you can say particular app or any of the like trading you are used to use trading, they will give you a paper money. Okay,
Okay.
that is not real.
Ah, right.
So you can trade with that like around 4 to 5 months. And then if you think that your strategy is working properly, then you can come in the market with your capital.
Okay.
So that is the safest method I feel that each and everyone should pursue.
Okay.
So what I feel is that like everyone should like do paper trading and all for around 4 to 5 months, and then if they feel confident about that they can make market with they can make profit with the real money. So they can bring that capital into the market. Then after learning each and everything, they only come to the market. Don't see anyone screenshots profit like around making 1 CR every day and all.
Okay.
So it's not like that. So yeah, that's it.
How much capital is actually needed to enter into this stock market?
Okay, so actually I've taken a loan from my dad. Uh, so I use that capital and I give him 3% every month, and
Okay.
whatever the remaining profit I make, around 12%, that I will give. And that is my pocket money that I am earning right now.
Okay.
So
Uh,
even I'm giving good amount of returns to my dad, like every year, like around it will be 3 into 12 is 36% returns. Okay, and bank usually give you the returns of like 3.5%
okay, on savings
every
account.
annual on savings account, and FD rate are even down like 5 to 6% and all. So it's good amount of returns, and that's it. And I only do option selling. Okay,
Okay,
and with option buying, I hedge the positions, and there is advantage of option buying for the margin. So I do in that way.
great. So to the person who want to pursue a career like you will give advice to learn first,
Yeah,
do paper
definitely.
trading,
Yeah,
and
definitely.
then borrow some money from your parents or anyone else.
No, either you work hard on another skills and then you make money and then
Okay, either
you
way,
can bring.
you can borrow money from
Yeah.
your parents or
Ha,
you
ha.
can earn from your
Yeah,
on
definitely.
yourself and invest in that. Great.
Yeah.
Coming to the next question, what is the reason you entered into the trading world?
Actually, that fascinated me a lot. Actually, I used to see my cousins that making good amount of profit. Yeah, profit is the only reason I came into the trading. So yeah, not particular reason, but that fascinated me a lot. And actually, I was seeing that you can make a good amount of returns every year and month. So that was one thing that really fascinated me, and then I started my journey in the trading.
Okay. What is the most common myth that you have faced in the stock market about trading?
Like about trading, that I have heard from many of the yeah, like older generations people that they are saying that trading is a gambling and all. So actually, it's not like that. If you are able to manage your money properly in the market, then definitely you can make a good amount of returns. So the myth is that trading is gambling and all. So it is not. Those are things like that. Yeah, that's it. Like I even don't know what are still myths in the market.
The trading is like a profession or is just like a hobby?
No, trading, like just there are many of the people those who ask like they can do part-time trading or not. It's not like that. Definitely, if you want to trade in the market, definitely you needed to give like hours and hours to the market. So trading is actually a business.
Okay. I
So
read
it's not
somewhere.
like part-time and all. If you want to invest in the market, definitely you can invest for the part-time. But if you are taking this as a career, then definitely give your time. That's it. I would like that.
Okay, I read somewhere that if you treat the stock market as an hobby, you will lose
Hmm.
money, and if you
Yeah,
treat it like a
definitely.
business, and
Yeah,
you will gain money because
yeah, for
we
sure.
spend money for the hobbies, not for the business.
Yeah, yeah, that is very true, Atharva. And even you might have seen your friends, okay?
Yeah.
So no need to give any example. So those who only think that stock market gives more profit and all, it's not like that. You need to sit in computer like from 9:15 to 3:30. Then you will make some good amount of returns and all.
Okay. That you have to sit every day or on some specific day.
Like on Saturday, Sunday, the stock market will be shut off. So from Monday to Thursday, mostly I will be sitting on.
All the
Yeah, all the
time.
time. Yeah, all the time. But actually, I properly hedge my positions. So even if the market goes opposite to me, the loss will be very minimal, and I will get out of the trade with minimal loss at very early point. And I will, if the market goes in my direction, I will wait for the profit for a longer time. So
Okay,
that is
great.
one thing.
Um,
Cut your losses very quickly, and if market goes in your direction, if you are making good amount of money, then hold your position as long as you can,
okay.
or either trail the stop loss particularly.
In the last question that you talked about the technical analysis, can you
Yeah.
explain what the technical analysis is all about?
Technical analysis is mostly the price action. Okay, so there are candlestick charts. Okay, you might be knowing.
Yeah.
So that is particular technical analysis, and fundamental analysis, like you need to do a then invest in particular company. But in technical analysis, just you will be seeing breakdowns, breakouts. Then you will be using some of the indicators. So that usually is a technical analysis. And yeah, actually I have made a PPT, and I will be sharing that. Actually, I will be not talking about the trading, okay, in this PPT, but how you, in the longer run you can make good amount of returns. It will help you a lot. Okay. So
Great.
actually, I have prepared a PPT and I will share.
Okay, just one last question.
Yeah,
Uh,
yeah.
what does the freedom mean to you?
Okay, so like, yeah, actually, what I think is that, like, I seriously have the desire to be financially independent as early as possible in life. So actually, I don't want it to be dependent on my parents. So that's particular thing, that being financially independent as early as possible. That is one, like, you can take it as a freedom. Okay,
Okay.
so that is one particular thing that I think it's freedom. It's like, you know, like,
Okay. So for a person who is working on a 9 to 5 job and
yeah.
wants to start trading, or we can say investing, how will you guide it?
Okay, so I told you that trading is particular business. Okay, if he's doing 9 to 5 job, definitely he should only focus on investing. Okay,
Okay.
investing into the markets. So actually, I've made a PPT. I have showed how you
Okay.
can invest around, like
Okay.
if you are doing a job and all. So yeah, can I share?
Okay. Sure.
Yeah,
So.
and actually, I will be telling the strategy. Okay, like I will be telling what is swing trading.
Okay.
Like those who are doing job from 9 to 5, even they can do that kind of trading.
Definitely.
What is particular? Okay, I will talk about swing trading. Okay, if you are particularly, like, example I will give you, if you bought a stock, okay, in your holdings, and you are holding that particular stock for around 1 month or 2 months, not more than 1 year.
Okay.
When you will see the profits, you can sell. Like that is called a swing trading.
Okay.
So means you can hold your position for like around 1 day or more than 1 day,
Hmm.
but not more than 1 year. That
Okay.
is called the swing trading, and most of the people can do that. I
Okay.
think it will be possible
Great.
for the people. Okay, and I would like to give the disclaimer that always take advice from your financial consultant, and only then follow. And this podcast is only for educational purpose.
Okay.
Yeah. So I've made a PPT, like those who want to do a swing trading, okay, they can definitely follow this very simple systematic plan for trading. So we'll be discussing the components of trading plan, okay. So particularly there are 6 components, and the first is create a watch list. And what I recommend you is that definitely don't go the stocks that are only focus on the Nifty 50. Okay, so that is main, because like there is more liquidity in the stocks that are in Nifty 50. So only focus on that stocks. Then create your own strategy. Like I will be telling that how I created a particular simple strategy, and I will be sharing you that. And the name of that strategy is Rainbow Strategy. And I'm saying is that don't go after learning the strategy directly into the market. First, do paper trade for about 1 month. Then now, right stop loss is very important. So many of the traders, those who are trained, they might be knowing like what is support, resistance, and all. So always place a stop loss like where there are major candles below the support. So yeah, that's it. Right stop loss plays a very important role. Even I will be showing that how you can place that, and position sizing. Like for example, if you see, if you have rupees 1 lakh as a capital, okay, how you are going to manage your position, that really matters. Like I would recommend only risk 1% of your capital on per trade. So position sizing is very important, and after every trade, try to review particular performance. Okay, have that strategy worked into your system or not? Okay, and disclaimer: this is only for education purpose. So yeah. So what is swing trading? Actually, I have discussed that. So we'll be seeing how I select stocks for swing trading. Definitely, I will not go beyond the stocks that are above Nifty 50. I will only focus on the stocks only only the 50 stocks that are present in Nifty. So now I'll be sharing you my personal strategy. This is exponential moving average strategy called as rainbow strategy. I use uh, four moving averages. So yeah, I will be sharing this. Okay, so this is the investing.com, and actually it's a very good website, and it is actually free. Okay, so you can come here and you can put as much as indicators you want on any of the chart, and these are the playlists that I told. Actually, these are Nifty 200 stocks, but I would recommend if you are beginner only focus on Nifty 50 stocks. Okay, so any of the stock will take. So we have taken Cipla Limited. So nothing you have to do. You have to place four indicators, four exponential moving averages. So one, two,
Those who
three,
are
and four.
beginners, Ritesh, can you
Yeah.
tell what is the indicator and all this stuff?
Actually, just see if indicators. This is actually a particular moving average. So it will take an average of last. Like now here period is 9. Okay, it will take average of last 9 candles exponential, and according to that it will place a particular line. So now we'll be changing the settings of these moving averages. First we'll place a moving average of 5, and we'll take it as blue color. Okay, and secondly we will place it as 14, moving average of 14 exponential. So color for this we'll keep it as yellow, and third we'll be taking a moving average of 21. Color for this we'll keep it as green, and at last finally the fourth EMA that we are going to keep as 65, and color for this keep it as red. So actually we have to place this like around four moving averages onto any chart, and this tool is free for everyone. Okay, there is no paid tool like trading.in and all. So this is one particular thing, and we'll make this as bold. Yeah. So the first rule of this rainbow strategy is that all moving average should consolidate. Like you can see here, all moving averages have consolidated. Like the opening have become very small. The diameter of this pipe, you can see, have become very small. So this is the first rule. And then the second rule is that actually these should be in order, in particular order. So you can see here, the 65 is above, and then green color is 21, it's below that, and 14 is yellow and it's below 21, and then at finally at the last is 5. You can see here the particular blue color. So this is the second rule, and the rainbow should be disclosed. Okay, and if this order is like from 65 to 5, like in this particular, then you can definitely go for a short position into the market. So definitely I know you can't short for holdings and all, but I will show you where there is a major buying and all. Okay, on the chart. So this is 15 minutes time frame. So you can see here. Now here the highest moving average, that is 65, is below. Then after that it's green, then yellow, and then blue. Even if you have bought here, like for swing trading, you would have made good amount of returns. You can see. Okay, and what is particular stop loss? Definitely you try to trail your stop loss as much as possible. Like this is like this is consolidate retracement, then again it was up move, again retracement, so you can keep the stop loss below retracement and you can allow the stock to go up. So this is very simple strategy for the beginners, those who want to do a swing trading. You can check it on any of the chart. So this was a simple strategy that I have shared. And yeah, you can see from like around here the consolidation happened and they were in particular order. And even if you have bought here, even if you have gone long position here like 891, you would have achieved great amount of return still here. So and the stop loss just below particular retracement. Okay, so with that you would have made a great amount of profits, and this is the simple strategy that I use for swing trading. So yeah, so this was my strategy. Okay, so now I have discussed the strategy for the swing traders. Okay, so this rainbow strategy is very simple. You can use it for swing trading. Now we'll be discussing about the particular index. Okay, now Nifty 50 is particular index in the market. Like top 50 companies in India are present in this Nifty 50. Okay, so this is particular beast, that is ETF, that is exchange traded fund by Nippon India, and the another ETF is of gold, that is gold bees. So currently, as of 31st May 2021, the price of Nifty bees is trading around 165, and I think there is a tracker factor. So we should check that it will be like around very less for that particular ETF. So Nifty 50 ETF, like you can directly invest into this particular ETF, and this is trading around 165 as of 31st May. Okay, and if you will see the Nifty 50 B CAGR is compounded annual growth return. It's around 19.11%, like every year. And you know, the Warren Buffett said that compounding is no, I think Albert Einstein said that compounding is eighth wonder in the world. So it is very true. So I'll be showing how would it affect like your holdings and all. So I will open a particular calculator. So this is the calculator, compounded annual growth return calculator. And if you see at age of 20, even if you start investing rupees, I say around 2500 every month for around next 30 years until you are 50. Okay, so I'm assuming like you are age 20 and you invest 2500 every month. Okay, so and the number of years you want to invest for is like 30 years, and number of years you want to stay invested in is also 30 years, and the annual compounded return like we have seen now, it is 19.11 for Nifty Bs. Okay, so by the end of 50 years, even you will see the returns, like after 30 years your investment value would be 9.08 lakhs, and that growth will be around 6.15 crores, like it's near to $1 million. So literally no one, like even if you see the mutual funds, they will also not give you this kind of returns over the long term. And this is the power of consistently doing the SIP in particular index and all. So yeah, the Nifty B CAGR is around 19.11, and if you see the gold B CAGR is also around 19.11. So at the end of 50 years, your initial value you invested is around 9.08 lakhs, and the value after 50 years, like around 30 years from now, that would be around 6.18 CR something, like we have seen now, right? So it will beat the inflation, and it will beat the inflation. Okay, and Indian inflation rate is around around 6.5% and all. So definitely it will beat the inflation, and it is very safe. And I would like to give you an example like how compounding works. Okay, so the Wipro have given a multi-bagger returns. Okay, if you have invested like 10,000 in Wipro in 1980 when the IPO was launched in 1980, it was trading around one share for 100 rupees. If you have even bought 100 shares, okay, so the value of that shares, I would like to show you how you would like seriously you would get astonished by seeing that particular returns. So Atharva, can you guess that how much it would be in today's valuation?
Uh, Around 1 crore.
No, definitely not. It's far better than one CR. Just I will tell you how this compounding works in the market. Okay. So there is one concept split bonus of particular stock in the market. In 1980, even if you have bought 100 shares and the price would have been around 10,000. Okay. So the bonus, this is the bonus history of Wipro. You can take the screenshot of this particular share, and by 2019 you would have like around 2 crore 56 lakh shares. And if we'll see the price of Wipro now, just wait, I will be showing you. Like we'll be seeing price of Wipro. So you can see the price of Wipro is around 538.50. Okay, and you are having the shares like around 2 crore 56 lakhs. And if we'll see that on calculator, 538 538.40 into you are having 2 crore 56 lakh shares. 256. Hello. So you can see the price of like we have seen by the end of 2019 you would have 2 crore 56 lakh shares, okay, of Wipro, and the price of one particular share is 538.40. And if you see the valuation today, it would be around 1378 crores. So even you can't imagine this kind of returns, and this is the power of compounding. Okay, so this is how the compounding works in the market. So always, whenever you take shares, try never to sell it for the long term. So you can get even the good, better than this multi-bagger returns over the long period of time. Okay, so yeah, that's it. So this was the Wipro split bonus history. In you can see, if anyone want, they can take the screenshot of this. So now let's come to the main topic. Actually, I told that you can invest in particular stocks that are outside the country, right? Like those who have globally established all over the world. So there is one ETF on to all brokers, N100. This is a Motilal Oswal ETF. They invest in Nasdaq 100 stocks, and Nasdaq is the index of USA. So I'll be showing that particular stocks they invest in, this ETF invest in. So this is the Motilal Oswal Nasdaq index. So you can see, okay. So the top 10 stocks in that particular ETF is Apple. Like they hold like around 11.25% stakes from that particular ETF. You can see there is Apple, there is Microsoft, there is Amazon, there is Tesla. So these are the top 100 companies that are in Nasdaq 100, and they invest in particular uh, Nasdaq 100 top globally companies. Okay, so this is the ETF that is around trading around 980 rupees. So you can take this kind of ETFs and keep it for long term. Even they will give you good amount of return, and the CAGR for this is around 18.40% every year. So definitely you will beat inflation and you can make a good amount of profit for the long term. So that is one thing. And actually I would like to end my PPT. So yeah, that's it from my side. So how was the presentation, Avtar?
It was a great indeed, and I have never imagined the effect of compounding that it was so big. And 10,000 invested in 1980 were in
Would
and
have turned around like
almost
1400
1400 crore.
crores. Yeah.
That's the
So
huge
that
amount
is
of money.
and plus the company declares the dividend like over a long term.
Okay.
So the people those who have invested in 1980 around might even have earned around 100 crores of dividend on that particular stock.
To the what is dividend?
Like just see now company declare the profits, right?
Okay.
Quarterly profits, and they decide whether to share a particular amount of profit to the investors those who have invested in that particular share or not. So if
Okay.
company declares dividend, like they will declare like 2 rupees per share and all.
Okay. It
So
was kind of earning to those people
yeah,
who are holding the shares, which are
yeah,
holding the
those who are
shares.
holding the shares, the company declares the dividend like uh,
It's
yearly
amount
once
of
or
profit from the companies which are
yeah,
given to the
yeah,
shareholders, right?
yeah, right. So even the investors have earned a good amount of profit through dividends over the last like around 41 years, right? From
Okay.
1980. So actually, I will be sharing the Telegram link to the Atharva, and Atharva, you can give that
Yeah,
as
I'll put that link
well.
in the description below.
Yeah. So whatever the personal trades that I'm taking in my personal account in future and options, I will be sharing there. And
Definitely.
yeah, that's it. Yeah,
Yeah.
that's it from my side. And it was really great talking to you.
Thank you, Ritesh, for your valuable time that you have given to this podcast.
Packs, I'm up in the greenhouse. Ball it up, I'm with the game. We taking shots off the